Hi, morning traders. This weekend, Saturday, Sunday, and Monday, I will have a workshop in Singapore. And since last week, I too have a workshop in Ho Chi Minh, and I missed the webinar. So I thought I will do a webinar before tomorrow my workshops. Right? Worried that I will miss the next webinar for next week. Alright, so basically these sessions I will talk about some of the level supply demand that I'll be looking, and you too can be looking, and when next week when the price come to those level, and you'll be looking for some opportunity. Right now, let's start with the our dollar index as usual. Yeah. You can see that this is the US dollar, and we have been rallying, and we have a top price pullback. Looks like we're going to have a price is going to react at this level. This level is around 118, right? So most likely we're going to see the price retrace, drop down to this demand and rally. Alright. Of course, right now in the market, that means the talk is basically speculate that in the September next month, the Fed will not increase their rate, will not hike their rate. Right, the probability of increased rate have dropped to about the 30+% from more than 50% like last month or weeks ago. Right. Of course, this this drop in the market believe that Fed will not increase the rate have due to various factors. Right. Of course, one of the main important factors that the Fed take into considerations are all the economic data are pretty good. Right. And the other thing is the oil price has been dropping below $50, right? So this makes Fed even more difficult to justify the increase in the rate, right? Commodity prices falling as well, okay? And of course, the latest salvo that fire from the China, which is the devaluation twice the Chinese yuan, right? The devaluation of the Chinese yuan have make the US dollar stronger, right? And if Fed is going to increase the rate again, that will make the dollar even stronger. All right. So there are many factors that make the market believe that coming next month, September, the Fed will not increase the rate. Now we see that the US dollar is still rallying. Right. Example, right now you can see the price is looks like it's pulling back. Right, and it might go for another run, right, until September comes. So what might potentially happen is we can see the price rally up to this double top, right, next coming to the next month, or we spike through, and then we start to see price, the dollar start to pull back if the Fed did not increase the rate. We're going to see a start to fall on the US dollar, right? So be watch out for that. Now, and yesterday we see a rally in the in the euro, right? This has actually, you can see I show you the euro dollar. Give me a second. Okay, the euro dollar. You can see the euro dollar has been rallying, right, for the last yesterday, and this is basically due to the fact that the euro is a funding currency. Funding currency meaning to say that the interest rate of the euro is so low that it is become a currency that most of the institutions borrowed, right? They borrow the euro and then invest in some other high yield currency or high yield investment. Example is stock, right? So yeah, last night when we see the S&P, the stock sell down, you can see this is a weekly time frame. This is S&P SPX 500, right? You can see this S&P dropped. When you go to the daily, you see this big, huge drop, right? This is a sell down in the US stock. Usually when you have a sell down in the equity, the US stock, you can see that the carry trade effect will come into squeeze. That means those funding currency will get squeezed, and the money flow back to the funding currency. So you can see that because of the equity is sell down, all the money flow back to safe haven or funding currency, and flow back to the euro, and we see the euro start to rally, right? Yesterday, okay. And okay, let's start with the euro. Since we're talking about euro dollar, we talk about euro dollar, right? Euro dollar has been going up, and looks like in this we are in the no directions on a weekly time frame. Monthly also no directions, weekly no directions, daily you can see that we start to go into the uptrend, right? And this we might see the price continue to rally up because the supply comes in only around this area, right? Okay, so we must see the euro start to continue to rally, right? But we have a demand right here. Okay, so if you trade based on the current price, it's kind of too high, right? So what we're going to do is we're going to wait for price to retrace. Get a refreshment, get a retrace, right? And I see where they can retrace lower, enter. But basically right now to enter euro is kind of long, it's kind of too high, all right? Okay, but when the euro fall back to some good level, we can consider to go buy again. Okay, so let's go on to this pound dollar. Pound dollar has been sideways, right? Monthly sideways, weekly. We have removed one supply, two supply, right? So we are in an uptrend. Let me see whether we're in uptrend or not. Let's draw the okay. We have removed, so now we are still in the no directions, right? So in the weekly no direction, monthly no direction, and weekly again we are in no direction. But it looks like market is breaking out, right? You can see that this is it's very interesting. You can see the price is making a lot of tops here, and right now the market is aging up, right? So this is like a holding gains, right? The concept of holding gains. Looks like market is jumping across and pull back and then rally up. Okay, so we have a supply right over here on the pound. Okay, see the supply there. Okay. I don't have this. The reader. Okay, so you can see the price coming to this supply and it refused to back down. This is called holding gains, right? So we go to the H4. Yeah. So the thing is, we have today is Friday, right? Friday. So I think there's no need to see H1. Okay, so for euro, just basically just get ready for it to jump across the creek, right? And but of course, if we see some kind of pullback, maybe pull back to this demand. Is there a good demand here? There's somewhere this demand, but this demand doesn't have 1:2, right? So if you're going to look for a buy on this demand, we have to go down to a lower time frame because it doesn't have the 1:2, right? So we go to the H1. You can see this is our day. This is our H4 demand, and inside H1 demand we have this, right? Again, this tail is very long, so potentially we might see price drop all the way around here. What usually I would like to do is, since the demand is so wide, right, I would just simply wait for the price to drop. Right, I have no idea where it's going to react. So today is as an intraday trader trading on the 1 hour time frame. Let us see whether the price can drop all the way to this demand, right? And then we get a trade from there. Okay. course, during when the London market open and we see the price start to rally up, but if it fail and close back below, right, and we know the price is likely to go the opposite directions, it's going to the path of least resistance, and of course we can look for a selling opportunity over here. Okay. Okay, now the other thing, let's look at the dollar Swiss. We have never talked about dollar Swiss before. Let's take a look at dollar Swiss. Now dollar Swiss, I identify a few levels. You can see that we have price rally up to this supply, right, and the supply is in control, and the price coming back to this rally base rally. Okay, so and we have a strong departure. Looks like this will not hold, right? This is a CP demand, right? Supply is in control, right? So this CP demand is unlikely to hold, and if I'm looking for buy, I'm looking for this or this. Okay, so I would like to wait for price to drop down further and look for potential long as an intraday trader, right? Now if we go down to the daily, you can see over here there isn't very clear demand, right? Very messy. Okay, so that this demand is not so good. I would rather wait for price to drop, right, and I see where does it react. I see where does it where it's going to react, and wait for confirmation entry, rally, and when the price pull back, I will look for a long trade and buy back up. Okay, so this is Swiss franc. It might happen to now, it might happen to next week, right? So just watch out for this pair, right? Should the price come down to this area, you might want to look for opportunity to go long $1 Swiss. Okay. Next one, we talk about the dollar yen, right? Now dollar yen, I have an intraday short yesterday, but it wasn't triggered. See, we have a demand here. Sorry, we have a supply there, and the price dropped, right? Price dropped, and I was waiting for the price to retrace back, but it didn't retrace back. You can see that the 4-hour time frame. I was waiting for the price to retrace last night. After the price falling through the ice, you can see this candle is the falling through the ice candle. Right, this candle falling through all this, right? So I missed the first pullback. Actually, I missed the first pullback. So when I finally watched this pair, and I put a sell limit at this on this candle, you see. You know, if I would have to, I've been watching this, I would get into this trade. Can you see that price falling through the ice? Next candle pull back immediately, right? So I missed that pullback, so I put my sell limit a little bit lower, hopefully that it will come back to trigger, and the price just didn't come back. You see, it almost come back by a few pips, and it dropped off, right? What a waste. Okay, otherwise I will trigger here. That will be give me 131 pips. Alright, so this is falling through the ice. I missed the trade there. And so the yen also is something to do with the economy. So yen is actually traditionally is the funding currency because the interest rate is low, right? And funding currency is actually something to do with the carriage rate. When the currency is the investor or institutions, they like to borrow the money, right? They borrow the money from those currency that have a low interest rate and then invest in those high yield currency. So at the moment you can see that euro is one the currency is considered the funding currency, and the yen is traditionally a funding currency. Okay. So when we might see the price start to rally up, say around this area, right? You can see that there's this area, the price start to stop, right? Pause there, right? And this could be the level that we can look for the price start to react, but we don't really have a very clear demand there. It's just that we see a drop base rally followed by another base rally. Okay, and this is the daily, this weekly. Okay, cross there. Yeah. So if the price can drop all the way, which is unlikely to happen anytime soon, which is 120. Right now it's 124. Of course, that would be a very good level that we can look for long, but it's not going to happen anytime soon. You go to the daily, you can see that we have a demand right over here. Right? Okay, 120 pips. So that will be the level that we're watching, 120, 121, 121.50, around there, right? So we might see the price just simply break through this level and go for this before we see the price start to rally back up, right? So this is the level that we'll watch next week. Okay, should the price drop to this level with confirmation entry for $yen. Yeah. Like I said again, yen is traditionally a funding currency. When carry trade come back again, you see the price start to drop. When there's a carry trade, we're going to see the price, the market going to come back to borrow yen, right? And then invest in other currency. Okay, and then which you will see the yen in the demand again, right? So the carry trade because of this. Okay, the next one we talk about is the Aussie dollar, right? Now Aussie dollar, you can see that on the daily time frame we are basically in a sideways. Monthly time frame we are in down. Weekly we are down. Daily in a consolidation, no directions, right? And with the China factor coming to the play, that when China continue to devalue their yen, and the economic data is keep coming out is bad, and there looks like China economy is really in bad shape, worse than what is reported, right? So and that's going to affect the Australian dollar, right? We're going to see the Australian dollar continue to be weakened. Now, of course, can we look for a trade there, right? If we are looking for intraday trade, we'll just look for buy when the price is coming back, and then trade on the range, right? Just buy as low as possible. When the price will move up, you take profit and you sell, right? So you can trade on this range. Okay, no direction trade. In the 4 hourly, you see that last night actually I saw this trade and I went in and last night. Yeah, it's last night, correct. Last night I was watching the Australian dollar and the price came down to this demand. You see this demand? You see that? Yeah. This demand. You see how the price react to the demand? Right, so I enter long here and see the price took me up very fast all the way up here. 50 pips intraday profit. Easy profit, right? The path of least resistance. So, alright, so there's a Aussie dollar. So you can buy, you can sell for intraday trade as long as you enter at a good technical level and good supply demand, right? Of course, we also have to consider the time of the day, especially when you do the intraday trader, whether it's the Asian sessions. An example, you can see that this is the Asian sessions, right? This is the Asian sessions, and the price try to go for the high, right? Fail. And it moved the opposite directions, and when the price came back to this area last night where I long, it was like almost the towards the end of London sessions, right? So towards the end of London sessions, the price come to a good demand and the location is low. It's a location setup, right? So I enter long somewhere here, price rally up here. Okay, easy profit, another easy profit there. Let me show you the 15 minutes one. It's 30 minutes. 15 minutes. My data is so slow. Okay. Anyway, Aussie dollar, like I say again, is not doing well, right? So if the price rally up to a good supply, just look to sell, right? We are in a no direction location setup. Just look for the confirmation to entry, right? But if you are looking for long, just be careful because you want to pay attention to the time of the day, etc. Okay, but if you want to do a long, because Aussie is downtrend. Okay. New Zealand dollar is almost the same as going the same direction as the Aussie dollar. We can see the daily is basically in the no directions, and weekly is down, monthly is down, right? So You can look for a sell, but for a price to pull back, it will be quite a long time for a price to pull back, isn't it? Right. So if we are looking to sell with a location set up, right? So if now we can see daily is basically no directions, and we'll be looking for a sell. Okay, when the price pull back to a good supply. Okay, here this is the supply. Okay, a supply, look for a sell, or when the price pull back to its location, means that the price is low, we can always look for a long, right? But this is removing everything, this candle, so the low should be this low. You can see that this lower than the right, so we need to scroll back all the way to the left and look for where is the demand, where is the daily demand, right? It's not there, so let's go. Okay, scroll back all the way to the left. Oh, this is amount. Oh, okay. Finally, we see here, right? Can see that, right? Rally price pullback. So that is the demand. Okay, so that is the weekly demand. Okay, so now this daily, we go to H4. We talk a location setup right now, right? So if the price rally up, we look to sell in this area. Right? But if the price start to drop back, you are looking for buy at this area, location. Right? Location we can sell, we can buy. It all depends on where is the price, right? So just wait. Tonight is Friday. Today is Friday. If it's no trade, then wait for next week. If the price rally up, we sell. If price come down, we buy. Okay, location setup. Okay, I think that's it for all the pair. It's a quick webinar, so I thought I'd do it, so at least now I'm looking at H1 right now. You see that we have a very, very distinctive demand here. Can you look at this? And this demand is actually very, very near to our H4. Is it H4 or daily demand? Daily demand. H1 demand is very near to this, so you can see that if the price drop, right, that will be a very good level to buy back again. Okay, see this kind of departure. Let's take here. This is no good here. But this is the middle of the location, the middle of nowhere. You can see that this is our supply. Our supply L1, demand L1, and if you buy here, now we are kind of too high, right? So it's not really a very good area to buy. Okay, we want to buy in location, we want to buy as low as possible. Okay, I think that's it for this short webinar. Okay, thank you very much, and I'll see you again next week. Yeah, bye.